morning. My name is Alberto Lavandeira. I am the CEO of Atalaya Mining. Atalaya Mining is a company listed in London. We have a project in producing copper in Spain, and we have a few other projects under development and exploration, also in the southern part of Spain, as well as the northern part of Spain. We have been with this name since 2015, and in 2014, I think we decided to restart the Rio Tinto project. It had been dormant for around 15 years, but has a long history of mining, probably thousands of years.
Well, hello, Alberto, and thanks for joining us again. I think you had a good session with one of our analysts. They seem to bounce off of that call, quite excited about what you're doing there in terms of reinvigorating the region. We should probably catch up on the kind of Q1, how things are going at Masa Valverde, and what I want to talk to you about today is perhaps what's going on in the marketplace. There's a lot of inflationary pressures, cost pressures on producers, and we can sort of flow into that. But what's the update for Q1?
Q1 was a difficult quarter. I would say the most difficult quarter for the company, based on costs. You're right, inflation pressures. Specifically, the electricity prices in Spain, it's not like the inflation went up 10%. It's like the electricity prices went up 400%. That's totally unusual, and something that cannot be expected to continue in the long term. Besides that, we also had some consequences of that huge inflation in diesel, prompted a strike across Spain due to transport companies having also those inflation pressures in the cost of diesel. So that stopped our operations during a few days, 10 days. So as a result of higher costs and lower production, our operating cost per ton, our production cost per ton were much higher than last year. Having said that, the operation performed quite well, and we were still cash flow positive, and we ended the quarter with a better balance sheet than we started.
Okay, well, I guess that's what people will look to, the bottom line, always. But just talk about, and I guess Spain's not on its own here. I think across Europe we've seen a significant increase energy prices, domestic, commercial, and also for automobiles. What's driving that? What's driving the electricity prices? Is it the whole Russia-Ukraine conflict? In which case that's kind of short-termism, or is there more significant underlying pressures on the energy system in Spain?
The problem has been higher with the invasion of Ukraine. The problem with Ukraine, but it really started in the end of the last year. The main reason being the gas prices. Spain and Portugal are like an island from the energy point of view, from the electricity point of view. They are not connected. They are connected with the European network, but they are not so reliant in gas like the rest of the Europe. But due to the system that sets the price of electricity, the price per kilowatt hour is set by what is called the marginal system, which means the price is set for everybody based on the highest cost producer. There's a daily match between supply and demand, except for lots of companies or clients that have set prices, like hedge prices, under long-term contracts, under long-term power purchase agreement, PPAs. So the situation is, let's say, linked totally with the gas prices. The gas prices have gone up due to the low inventories before the winter, because probably Russia was already preparing the situation, and the high dependence specifically of Germany in the gas prices. Of course, things have relaxed since then, and eventually this will be sorted out due to the higher imports of LNG, liquefied gas, as well as higher influence of wind and solar all around Europe and specifically in Spain.
So tell me, what does a company like you do? You're now a copper producer. You've reinvigorated some of the assets there, and we'll talk about some of the other assets coming online soon, and maybe some of the new technologies which you're applying to the recovery numbers. But are you reliant on the Spanish government, solving your problem for you? Do they need to look towards Tunisia, Algeria for gas supply, or do you need to take control of this yourself and look to maybe some of these renewable or LNG solutions yourself? I mean, how does the problem get solved, and how long does that take?
Unfortunately, in the short term, we cannot do anything except wait and see what the government is doing, not only for us, but specifically for all the industry in Spain and Portugal and Europe, I would say. Simply because we don't have a supply contract, so we have to rely on what's in the market. The government has already taken some measures to take away the link between the gas and electricity, or not take away the link, really limit the price of gas, because the price of gas right now is totally affected by this situation in Ukraine. So this is in the short term, which means this year. And in theory, this has been approved already by the ministers and the government. Spain and Portugal have been allowed, since we are in Europe, but have been allowed to have this special situation, which I suppose is going to be implemented the end of this month. Long term is where we have to take some measures. The company has already taken these measures. We already had signed power purchase agreement long-term with the supply company at a much lower price, at prices that would be like 5 times, so 500% less than what we have been paying the first quarter. This is possible because these long-term contracts are normally linked with the start-up of lots of wind and solar plants in Spain, and Spain is very powerful in that. So that has been done to get around 33% of our needs. We also started like 2 years ago looking at all the paperwork to construct a solar farm in our land. This is for self-consumption, so we avoid the connections with the grid, with the taxes that are implied with that. And this would be taken care of around 22% of our needs based on the area where we are. This plant has already started. We finally got the permits. It took a long time due to the bureaucracy, and due to the amount of work under the administration for this huge increase in Spain of solar and windmills. So starting next year, we will have, let's say, sorted out 55% of our needs at a very low price, which would be around 70% of what we have been paying historically. The rest will still be exposed to the market, but we may sign longer term agreements of limited length, because there is a market of futures, the futures are much lower than we have right now. So there is a market, and there are ways to do that in the long term. So we don't expect this problem of electricity itself to be there for a long time.
It kind of feels like the end of globalization in a way, in this current environment where we've took critical mineral lists and energy security for at a country level, but producers too, miners, natural resource companies are having to look after their own needs. You're talking about building, obviously signing contracts, and obviously building your own, solar farm, etc. That's going to ask significant costs. Forget the inflationary factors, but it's the kind of defense mechanisms that companies are having to employ will increase costs presumably across the board. What is your expectation of copper price going forward if more companies and more jurisdictions are being affected by, inflation costs around energy, cost of skilled labor, across the board? Because I was speaking to a fund manager yesterday, and he said, although we're enjoying some of the highest copper prices we have for a long time, he expects them to continue to rise significantly to, compensate for all of these increasing costs. I mean, what's your view of the future copper market?
It's a very interesting question, because everything is linked. In the copper market, we have two equations, like in any market, supply and demand. Let's start with the demand. The demand, it's growing due to several factors. The first is that we are more in the world, and that will continue like that probably until 2050, according to some things we have read. So if the population grows, there's more people demanding a house, a car, a fridge, TV, and so on. That means more people, more copper. Second thing is that we are going into a world which is more electrified. Just look at what were the measures that Europe took or decided to take following the crisis of the gas. We have to produce more electricity with renewables, mainly solar and wind. All those are linked with more copper in the networks. It may have wind in the north part of Europe, or maybe sun in the south part of Europe, but you need big lines to take the electricity from one place to the other. So that means more. But the same situation is not only in Europe. The same situation is happening in China, where they are creating huge solar and wind farms in the northwest, where they have more sun and wind, but taking it to the industrial parts in the east and the southeast. So all this we are seeing all over the place. Second is, okay, the electric vehicles is always something that's stocked, and all this, and demand that's growing fast, but is there to stay. At the end, this not only needs more copper as well as other metals, but it also needs a grid to charge those vehicles. So we are clearly in a process of more demand, more urban, more people with more wealth, with more rent per capita require a better living. Here in Africa, in Asia, and all over the place. So we are in a moment of growth of demand, in a growth of demand per capita. That's without question. We can have hiccups like we had with the COVID situation. We can have hiccups like we have seen with the lockup of China. But there's more people in the world requiring this, and the end result will be just a blip in an upward trend. From the supply, there's plenty of copper. There's plenty of copper in the world. There's no question that there's lots of deposits, but the deposits are getting deeper, lower grade, and more difficult. For a basic, simple reason. I mean, the easy part has been taken first. So what's left is left in the mountains of the Andes, in the mountains of Canada, in the US, in Indonesia, in some deep parts of Africa, or deep underground. That's not going to become easy to mine. The projects are competing in lots of parts in Chile and in Peru with water, which they also demand for other uses. It means projects are taking longer to permit, longer to develop. So we have a huge problem of demand. Even if we knew where would the copper was going to come from, if we had the projects, it still would need years to permit and process. So I'm seeing that this a short term maybe slow down as we are seeing this last few months, but in the not even long term, talking about 10 years, I'm talking about 1 year or 2 years, a real wall of lack of supply that will push prices at any price. The price will be any to stop consumption.
It's interesting, actually. We ran a 2-day copper conference a couple of weeks ago, and one of the groups, I think it might have been Woodmac or maybe even Glencore possibly, put up a slide which said, right, here are the top 10 copper producers. There's the number they produce. And you went, okay, fine. So where's the next copper coming from? And the next slide was the top 10 developers. So it was a big number that they could produce, but they'd all been held up, all 10, for environmental reasons. They could not get the permits to mine because, and if they could, it would be great. There's enough copper, as you say, but it's a question of can they get into production? So there's a whole bunch of other factors. We've talked, at the beginning of this show about, we've got energy energy costs as a factor, inflation as a factor. These guys are struggling to get it over the line because they can't get it past environmental components. So it's interesting when you talk about this wall coming up in the next 2 or 3 years. When you look at that chart, you go, yeah, that could be quite painful globally. But I'm more interested in what's it do for copper prices, right? This kind of this environmental component, the ESG component, the carbon credit component, in terms of stopping projects moving forward. What's it do for copper prices, and how do you, as a copper producer, benefit from that in the short term? Because again, I want to be fair to you. Your margins have been squeezed because of a 400% hike in energy costs in Spain, but there's got to be some upside at some point for you. One would hope as a shareholder. So how do you think that's kind of plays out for your company?
It's very simple. I mean, this mining is always a short-term, long-term investment. But look, all this situation with inflation is worldwide. In the case of energy, it's only Spain. But in other places where they had to generate the power with diesel or similar, the oil prices have gone up. The gas prices have gone up, so they also have higher prices. But in addition to that, the gas prices is affecting the explosives. Explosives are coming from gas or from nitrogen. Diesel prices have gone up. Inflation in people, in transport, sea freight is basically influenced with oil. So what's happening is that operating costs for everybody, all the producers are going high. So it's true, they're squeezing the margin. But you can see that the price of copper has not gone down big time, even with this crisis or small slowdown in China. And why? Because people tend to look at a little bit longer term. With this higher prices, copper prices, higher operating costs, what's happening is also that when you want to go and when you try to get the permits from your board or for investors to invest, that's also affecting the equation. They are going to come with huge capital increases and with huge operating cost increases, which means projects that 3 years ago, in theory, they were ready to be permitted, they may be permitted, but not ready to be invested unless you have a higher copper price, because you will not be able to hedge, you will not be able to guarantee a higher copper price. So projects that are 380 were okay 3 years ago. Today, with the higher inflation, they are not, because the capex has gone up and the operating costs gone up. So it means that again, another delay, plus what you said before, lack of people. The new mines are in the middle of nowhere. The good people, trained people are not at ease to get there. They are more expensive, and there's lack of technicians of quality to do those things. You add that the limitations of travel, you add that the limitations of COVID, because these projects have to be constructed based on several thousand people in a camp in the middle of nowhere. So everything is there to get a perfect storm to produce lower supply in the short term, even if we knew where were the projects. And yes, one project can come on stream like the ones being built in Peru and Chile, but then the next year, what? If you have a growth of demand of 2% per year over a market of 20 million, roughly, you have 400,000 to 500,000 tons of new copper per year. That's new copper. That's simply because the market is growing. New copper means building one of these huge mines each year. It's impossible. You can do it 1 year, you can do 2, but it will catch up. It will catch up, and the only way to get out of this wave is to get the prices so high to avoid some of these uses that, let's say, that can be substituted, which are not that many, and get these new projects working at any price. And that will take time. So we are going to see some years of incredible high prices. Another thing is, in copper cannot be substituted in some things. And in those that can be substituted, maybe, yes, but it doesn't affect the whole price of the element in a car. In a car, you may go to diesel, but even if the copper goes up, the influence of the copper in a car is minimum. In a Tesla, okay, has 120 kilos. That's fine. But in a big car, the influence of having double the price is not a big deal. So they will not stop the demand due to that, to the higher prices. It's very interesting what's happening. We are going to get into a copper age. Copper, I won't say that like somebody said it's going to be the new oil, but we are going to have some interesting times.
For sure. And I appreciate the conversation around the macro. I think it's always interesting to understand the thesis and, reevaluate the thesis as we go along. So I appreciate your input there. Let's talk about your project. Okay, so Masa Valverde, things are progressing in terms of, we get the costs have gone up, but in terms of your ability to extract copper and at the grades that you want, is it still giving you what you want? Because we have talked in the past about maybe accessing some of the lower grade components via a technology which you feel may work. So how do what's happening on the ground with that? And then we're going to move into San Antonio, maybe it's San Dionisio.
Look, a big surprise from visitors recently to our site has been the amount of copper and other metals that we still have in our inventory drilled, ready to be produced, that are not, let's call it, in our share price. The highest value driver is San Dionisio because it's immediately touching to our deposit. It's an area that has been mined in the past, but in the past they were only mining the high grade. So they left behind something with around almost 1% copper and around 2% zinc, which means basically double the grade that we have, and it can be mined by open pit. So in a matter of 1 year, 2 years maximum that we can, or as soon as possible after we get the permits, which we have no question that we'll get the permits, the value of the uplift of this San Dionisio and San Antonio is such that's almost double than what we have currently. The good thing is that we don't depend on that. It will be mined, is that we can continue with what we have right now in Cerro Colorado, in our existing pit. Longer term, we have Masa Valverde and other areas, simply to add optionality to our company, to show that we not only we have this, let's say, 15 years of mineable open pit reserves, but we can add value from these other areas that are in the same belt and quite close to us. That's why we have a good exploration program going on in Masa Valverde, because we believe that's very prospective and we're going to be finding more there. It's going to be copper, lead, zinc, and copper, lead, zinc is complex. And that's why we have been developing for now 6 years, helping a lady that invented the system called Helix, to be able to process successfully this complex copper, lead, zinc materials that certainly are not going to be staying in the ground.
Okay, so Helix is potentially quite important to you, but what do you know now about that in terms of the kind of byproduct credits which you're going to be able to get? What's the kind of uplift in terms of the copper equivalent number from where you are to what you think you potentially could get?
I see this company producing in less than 2 years' time around 75,000 tons of copper. That's without the addition of Touro. When we get Touro, we'll go over 100,000 tons of copper. And I say that, and we have been doing that from 2015, where we started with around 25,000, and then we went to 40, then to 55. And the next uplift will come from these areas around the pit, simply with the same installation that we have, treating higher grades. The next uplift will come with this Helix, which will be able to give us additional byproducts, so copper equivalent, if you want, through lead and zinc, which right now we are not recovering.
But what give me a sense of, in simple terms, for shareholders, people looking in here, you've had a really good year since the sort of middle to end of last year. You had a massive uplift in your share price. All stories need a growth component. Is this technology, Helix, part of that, or is it more a case of you'll see the increased grade, copper grade, at Dionisio? Where's the growth component come from? What are you going to attribute that to?
The growth will come with San Dionisio, with or without Helix.
Okay.
Without Helix, the growth can probably double our net present value simply based on grade, without making any additional change, simply adding a flotation circuit for zinc. With Helix, we are very careful of projecting things until we see it in an industrial way, but can be be a huge higher uplift, simply because we get high recoveries. It means that if you can get recoveries in a complex metallurgy of, let's say, 75% global copper zinc, in this case you can get to the high 90s. So imagine what it is to get from the same tons 15% more metal. As simple as that. So the value uplift is huge with Helix, but we are not putting all our bets in this. We have enough experience, and we have been very cautious going in 6 years, spending money first in a lab, then a small pilot plant, then in a large pilot plant, now constructing a larger plant and continuing with the test work. So we believe that's going to be huge, but we are not betting everything in this. The value uplift will come even without it.
Okay. I appreciate that. New technologies, usually the can give hope where perhaps there is none. You need to go through the phases in the process for sure. Look, the Q1 financial results obviously good. You say you finished the year with more cash than you started with. Finished the quarter with more cash than you started with, which is obviously good despite the difficulties around strikes and energy costs. But what do you do with this money? Has your strategy changed given the environment which we're describing, which seems to be evolving, or are you sitting back and waiting before you kind of place bets? Because in an environment where copper companies or miners are struggling to actually bring new product onto market, do you feel that you could take advantage by looking at increasing production, i.e. accelerating projects that you're working on? Do you look at M&A, or do you kind of stick with the knitting and stay in Spain, a place which you know and understand? I mean, how does the strategy evolve in a kind of environment like this?
We have stated that as soon as we had some free cash, we started giving dividends, and we are sticking with that. We said we are going to be giving 30 to 50% of our free cash back to our shareholders as dividend. Mm-hmm. And we believe that that's enough to still keep the growth. Okay. So we did that last year, and we are going to be doing this year. Okay. Even with this higher costs. We believe that if things go in normal, that would be the case. From the growth point of view, we are concentrated so far in Spain and Portugal, let's say in our area of influence, and we have increased the exploration budget because we believe that the best thing that we can do for this company is long-term growth. Looking at M&A, we have been looking since last 5-6 years very carefully. But for the same reason that we are always very cautious with the spending cash, we are also very cautious when getting things that right now everybody wants to sell for a reason, because the prices are high and sometimes they do not provide a real value to the shareholders. So if they don't create value, we look at the project, we are not going to grow for the sake of growing. We got the project we have in Spain with really not much spending. Simply all the payments are linked with success and with permits, and that's the way we want to go. Are we looking to M&A? Yes, we are looking at things. We have been looking seriously in the last months and years, and we continue to do that. If it makes sense, yes. So far, we cannot say that we have anything in the grounds.
So, and how are things going? Obviously, locally, obviously with the village nearby. Obviously, there's workings here for hundreds of years. We get it, and there's a kind of big footprint just outside the town. But do you still have to tread carefully with regards to your expansion plans? Is there any kind of resistance on that front, or I don't know how many people you employ from the town? How are relations generally?
Look, in the area where we are, it's amazing how much support we have. Unlike what you see in other places of the world, we are not having any trouble at all. We are a welcome neighbor. We employ directly around 470 people, but with contractors coming in every day, we have over 1,000 people coming every day to our site. And this has been growing from around 30 in 2014 until now, continuously. We employ almost everybody around our site. We have trained local people, technicians. We have a high percentage of employees in our workforce that have university degrees, which it means they are trained and they can be educated to do any job. And we have a very, very low turnover. We are happy employers, happy workers, and we believe a very good neighbor with really good support from the communities. Of course, we have environmental groups and anti-mining groups that will be making noise each time we do something, but that's normal, and that's part of the life. And they know that it's not true, most of the things. It's not going to stop because that's the way it works. But really, we are being set as an example of how to do things with the communities.
Okay. No, I think it's really important. The kind of jurisdictional risk, there's big conversations going on. I think people are suddenly realizing the extent of community relations, social license, such an important part of this. But right, so if you're looking, I really love this conversation today. But if I'm looking forward, what are the numbers that you are making your team concentrate on? What are the important numbers for you as a growing business, focused on delivering to shareholders, or for the sake of the company's ability to grow? What do we look at?
Yeah, look, to our teams, when we have once in a while some meetings, we tell them, look, hey guys, get prepared to what we call Horizon 2040. What do we need to do to be here in 2040? We're talking about years. I mean, remember we started in 15 when it was not only going to be 12 years live. So where are we going to be in this year? Long term, what do we have to prepare? We want to be a company that's here for the long term. We have to look at assets. We have to be more efficient. We have to optimize because we have a grade that's slower. We cannot rely only on the high copper prices to survive. So that's why we tell them, look, where can we create a long-term value? We believe that a big value uplift and long-term is going to come with this Helix, which I believe that after the first plant, we will install a larger plant, which means we will be able to treat minerals from all parts of the belt. So this will be like having your own smelter or systems where you can process all kinds of materials from the region. So it means we are talking about a very long life business. So that's where we're trying to tell them, look long term. What do we need to do to be there long term? Do we need to train people, locals, to get young engineers that right now just came out of the university, that in 5 years are going to be specialized in X, get ready for water, for electricity, for long term, for everything.
It's interesting that actually. To survive, I guess then it's implicit that of all the things that need to happen. Because I thought you might focus on efficiencies and the margins and the process and the technology, but I guess it's implicit that to be around in 2040, you need to do all of those things as well. Alberto, fantastic, good catch up, dividend paying. Fighting through the current market conditions and still producing free cash flow. We like this story. We'll reach out soon, stay in contact, and keep us up to date with how things are going. Okay.
Thanks very much. Yeah, I agree. Things are going as expected, so let's hope they continue like that.